गुड इवनिंग एंड वेलकम बैक टू पैसा बोलता है। पैसा बोलता है में फिर से आपका स्वागत है। मैं आनंद श्रीनिवासन। टुडे आई वांट टू talk about the Sony Z merger, of which Morning Context has done a report. This has been a long-running soap opera, and you will be aware that Subhash Chandra was the MP, independent MP of Rajya Sabha from Haryana, supported by the ruling party. And again, the ruling party put him up, and he lost by a whisker in the recent election. The relationship between Subhash Chandra and the ruling party is well known by the way Yogi Adityanath put his police to stop Yes Bank from taking over Dish TV. Of course, the Supreme Court intervened and put paid to it. Subhash Chandra is in serious trouble because of his failed ventures in infrastructure, and he has lost all the money he had. As of 2016-17, his businesses were running well and were very profitable. In his flagship company, Z Entertainment made a profit of 2,200 crores in 2016-17. He was doing well. All the Z groups where stocks were doing well, and even his SL World was doing well. In 4 years, he managed to run it to ground. To a point, the profits were 1/4 of what it was in 2016-17. That means the profits declined by 75%. That means you had a profit of less than 500 crores in that year. And all this while, it is Puneet Goenka, his son, who was holding managerial position. Subhash Chandra and his other son were banned from holding public office because they siphoned money away from a gold refining company which was listed and controlled by them. The SEBI order was stayed by the Securities Appellate Tribunal, and it went on. So IndusInd Bank and several other creditors have put intervening petitions and wanted to stop the merger of Sony and Z till their loans were paid off. The promoters of Z Entertainment had taken 2,000 crores of the company money and put it as a security deposit against loan given to Subhash Chandra and his family. Even that deposit was followed after a court action. So the Subhash Chandra and Puneet Goenka and his extended family have been guilty of several acts of moral breach in running the Z group. In fact, Puneet Goenka has been presiding over the company when Z has been exploited fully as if it was a private company by his father Subhash Chandra. But over a period of time, the stock pledged by Subhash Chandra was sold by his lenders, and today the stock holding of the promoters have dropped to less than 4%. So, powered by this Invesco mutual fund, this company was a takeover target for several media houses. One of the most important person to target this group was, of course, Mukesh Ambani and his Reliance. They are the fourth largest players in the media space and want to go top of the world. So, they kept on negotiating to take this company over. Invesco, taking a major stake in the company, pushed for this merger. Of course, Puneet Goenka and his father resisted this move because it would have meant that he and his father would have been pushed out of the merged entity, and Dhirubhai Ambani would have swallowed the company in total. Other people from whom Subhash Chandra had borrowed money were putting enormous pressure on him. Recently, SEBI passed an interim order banning Puneet Goenka and Subhash Chandra from holding any position in any listed company. It was an interim order, and this interim order was challenged by the Goenka father and son in the Securities Appellate Tribunal. It was expected, as usual, the Securities Appellate Tribunal would, of course, stay the order. Of course, the market feels it is because of several vested interests that the SAT has refused to intervene in the matter and has said that the two father and son duo must go to SEBI and face the inquiry because the order is only interim and not permanent in nature. However, like we know from the case of Axis Mutual Fund, the NSE IPO, SEBI writes a lot of interim orders and does not write final orders for several years. And therefore, if this interim order stays, it means if the merger goes through between Sony and Z, then Puneet Goenka cannot remain the chairman and managing director of this merged entity. That is the only hurdle, and that the vested interests, whose names are very clear to the discerning ones, have successfully stalled the desire of Puneet Goenka to control the conglomerate when it merges with Sony. Sony will be sitting comfortably because it will have more than 50% ownership of a listed company. The Goenka family will have less than 3.9%, and the balance will be owned by the general public. That Puneet Goenka is allowed to run the company would have been only a short-term relief, because over a period of time it was expected that Sony would put its own people in charge and take over the company fully. The merged business of Sony and Zee would have made one of India's largest media companies with a huge library. The matter is pending in NCLT, where all objections have been cleared. During the final arguments, Zee's senior counsel, Mr. Das, has urged the NCLT to expedite and consider the approval to merge the two entities. If the NCLT, which has reserved its orders, and passes an order supporting the merger of Zee and Sony, it will mean that the merged entity cannot have Subhash Chandra or Puneet Goenka as its directors, as managing director and director, and those two would have to be replaced by other people from Sony. The father and son duo will not have any role in the management of Zee or the merged entity. This anyway would have been Sony's plan. After a respectable time, the father and son would have been replaced by others, because the lenders are also targeting the 4,000 crore non-compete fee that that the promoters of Zee are to receive from Sony abroad. So it is very clear that this merger between Zee and Sony, if it goes through, it will be without the Goenka father and son duo, and the market does not seem to be bothered, because even after the refusal of stay, there does not seem to be a significant drop in the price of Zee Entertainment. Even today, it is trading at a 15% premium to the low it reached last year. The market signals that it welcomes the merger, even if the father and son, Subhash Chandra and Puneet Goenka, are not part of it. It is the opinion of Morning Context that the company itself is better off without the duo. Thank you for watching Paisa Bolta Hai. If you like this content, hit the like button of my channel and write your comments on the same. If you have already done that, subscribe to our channel and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. If you have done all of the above, send this video to your friends and relatives and have them take a look. Once again, I thank you for your support for Paisa Bolta Hai.